Garrett, we have a Fed meeting this week.
Yeah.
You mentioned that you like to trade the Fed drift when the market kind of slowly drifts up the day before the meeting. What are some key things that we need to be listening to in that press conference and how to trade it?
Historically, there's something that is known as three-Fed drift. Now, it has not been as prominent in the last couple of years as it was dating back to 1994 up until the mid-2010s. But it has been this historical pattern that a significant amount of the annual gains generated in the market oddly come 48 hours before the Federal Reserve makes its announcement. Why is that? I don't know the answer to that. It is an anomaly, much like insider buying, much like value investing, much like momentum. Other major thing, what I'm focusing on is the fact that the Federal Reserve has a $9 trillion balance sheet. Going back to 2018, the Fed's balance sheet was at $4.5 trillion. They tapered $600 billion over a 12 to 18 month period. And during 2018, this is the only data we have when the Fed tapers, the market finished the year off 6.5% in that long bull market that we saw. In 2020, December of 2020, the S&P 500 fell about 19.8%. So when the Fed is tapering, and you have a $9 trillion balance sheet this time, they are removing liquidity from the market at a time that there is a lack of interest in stock and institutional selling remains robust. So moving forward, the expectation is that when the Fed continues its tapering process, it will create large bouts of volatility in the market, much like it did in 2018. And remember, this year, every month this year, we have had the VIX go over 30. It looks like that trend will continue. And I obviously look for Mark's commentary on that as we head into the Fed meeting.
And we're live with Nick Black in 5, 4, 3, 2.
Pew, pew. 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 Hey, Breric, how is it that you announced the show in a kind of a creepy way, like a guy might if I was walking by an alley and there was like a guy in there with like an overcoat, and I know that if I stop and listen to what he says, he's going to open the coat. Why is it that that's how you do it?
Hey, don't Breric me first off. And second off, your pews are getting a lot weaker. You know, when we first started this whole shindig, they were a lot stronger.
Weak opening, weak pew.
What's happening in your life right now, Nick? Can we talk about
my
it?
pews?
Do you want to talk about it?
My pews are directly proportionate to your opening, like a creep in a dark alley. Your dark alley opening creep.
You know what?
Kids.
I wanted to do a solid build.
Alternative.
A solid build to the Nick.
Hey kids,
Wow.
we've got alternative wealth inside my jacket. Come get some alternative wealth.
Why did
in my
I
van?
turn into an old smoker all of a sudden in your
Hey kids,
little voice there?
Get in
Never
my
smoked
van.
in my life.
I've got it's the Miley Cyrus tour bus. Get in the van, kids, and learn about economics.
Hey Nick, we got a good show today. What do we got coming up, buddy?
We're gonna talk about the market. We're gonna talk about the market. You and I might spin a ditty about what happened with the board ape-tastrophe.
Please let us talk about that.
The land deal. Real quick, you guys want to know what the Fed's going to do? 50 basis point hike. Now let's move on. No, I'm just kidding. Watch Garrett, and I think that's going to be interesting. You know what? Garrett looked like he was ready to run for office. I'd vote for him. I would. Any office. Any office. All right. That said, just watch look. You want to know what the Fed's going to do? You don't need to even listen to the Fed. Just look at the yield curve. Skip the bills. Look at the notes and the bonds. They'll tell you everything. Great. Next lesson. Let's look at the market for a wee bit. We're going to answer your questions because that's always, cool and fun, bros and bro-cephuses. And hopefully you had a good weekend and you're not too stressing about what we see here. What we see here is, let's look at the greater market, is 1.76 trillion. That's 1,700 billion. That sounds like a lot. You say it like that, it sounds like, well, okay, we're doing some fancy stuff. But otherwise, it's kind of quiet. It's been quiet. Why? Again, I think the story now is that the DNA of the aggregate investor in the crypto space. When you suck out all of the bad behavior and you leave most of the morons in the NFT gambling space, what you get left is some retail investors that are over in equities getting it handed to them, a bunch of people chasing growth, getting it handed to them, a bunch of visionaries getting their clocks cleaned, getting their faces melted, as they should, because it turns out fundamentals matter. Maybe, right? So who's left? You have weak, relatively anemic markets. I think you have a more intelligent investor now in the crypto space, because everybody else is panicked their way out, melted their way out, fried, toasted, nuked, whatever you want to call it. So I think that we have a lot more smart investment, and that's why the dummy coins are not performing so well and some of the stronger assets. I will make a couple of quick comments. There is no chart on earth that's going to tell you what Bitcoin is going to do. I made 2 moves over the weekend, and I will let you know what they are. I was kind of hinting towards them. I started adding near again. I had originally taken a little bit of profit around high 12s. I had taken that profit and I had put it into Lux token. So this was the full trade, in case you guys were wondering. And I went into Lux and I dollar cost averaged into Lux. I think I sold 3,000 or 4,000. I'd have to look, but somewhere between 3,000 and 4,000 near at about 12, not about, at 1292. And I just took that, and it was all house money because I had my full 10x. So 10x take 20, right? You got to take some money off the table. Well, instead of going back to Bitcoin, which I think I'm fine in Bitcoin, and instead of just sitting in stablecoin, I had parked it in Ethereum and I was waiting. I then moved it into Lux token in the very beginning when we were getting the big rewards on Lux, well over 1,000. And the price went up, the price went down, anything. I cashed out my whole original Lux profit, and then I stayed in the staking with just the house money. It did cost me a little bit, but you just never know. And so I don't know if you remember that, Brandon. I had gotten out right around 290-ish, and I think Eric did too, as a matter of fact. And then I waited. I was staking. I waited. The coin continued to kind of grind down, and I think we're about 7 days away from the repricing of the interest. And just really quick, what we're talking about is they pay rewards, and those rewards, if we can get the rewards to show. Okay, so the rewards in the compounded interest is 146. It was dipping below 100%, which I know that sounds ridiculous, but they're going to reprice this here in a second. In 7 days, in 1 week. They're going to reprice this. When they do, I think this thing's going to crater bad. It cratered bad when it went from 1,000 to like 300%. Everybody's like, oh, 300%. It's the end of the world. What do you think is going to happen when this thing goes, below that psychological 100%, where it no longer looks amazing, and you have to start thinking, wait, what if the Lux platform never catches on? Like, it is a possibility that we should all consider that maybe Lux Rare does not catch on. Eric, Eric and I have been going back and forth about when to exit. I also think Eric got out. Now, you've been out, right? You've been out of Lux, Brandon, for a long time.
Yeah, I got out quite a while ago. I mean, it was quite a bit higher, but that's only because I saw the volume was dwindling. And then I'm also on the Twitter space quite a bit, and this is their pattern. They start as soon. This is what's going to happen again. As soon as Lux reduces their rate again, they're going to go pay a bunch of influencers. They're going to go on Twitter, and they're going to start advertising like crazy. They're going to be like, oh, I'm in Lux. I'm listing. I'm getting free fees. I'm doing all the Lux stuff. Look at me in Lux. Look at me. They're going to do that again. And then what's going to happen is they're going to pump those things, but then they're going to dump so hard again because they're paying those influencers in Lux. And so I imagine this next little event's going to be a big dump, but then it will rise slowly again, just as it did the last time. But I don't know that it's going to be anything substantial for you to invest in the next little bit by any means. I think there's going to be faster moving assets for you to put your money in.
Brandon, do you think the Lux Rare platform, I mean, is it catching, or it's not catching OpenSea?
No, the problem is OpenSea is so widely used. I mean, even anybody that's trading on Lux, 1,000% they go look on OpenSea first. 1,000%. Because the volume, the amount of listings, the amount of liquidity over there on OpenSea, you can't beat that. There's no way to trade into a volumeless pit because you're going to lose money on your trades. The only people that are actually legitimately trading are people either negotiating outside deals to get a trade done over on looks, or they just put a random listing up there to get their listing fees and it happened to sell. But everything's more liquid on OpenSea because it's just too big. It's like one of those too big. Are we gonna talk? Did you already talk about Coinbase, the NFT, the platform that launched for like? You mean days?
the Flopsky McFlopperson?
Okay, so you did talk about. I won't rehash that. But anyway, yeah, I mean, it's just
it was a fail. Yeah,
so hard to compete with OpenSea.
Yeah, sometimes first mover advantage may be enough, right? I mean, look, eBay was clunky and kind of not so great, and they had, some problems, but their first mover advantage in the culture they built was enough for them to beat out everybody that came after them. They beat Yahoo. They beat, Microsoft had their own kind of auction site. All of these companies, the big companies, went after them with their own auction sites, never really caught on, and eBay sustained. So, God, I hate to imagine a world where OpenSea is what we got, but it looks like OpenSea is what we got for now. And Coinbase does not present any kind of challenge. And now it's really getting watered down. I started getting emails this morning from Kraken NFT. Yep. Yep.
That's
They're like,
good luck,
trade no fees, in parentheses, and no volume.
Coinbase
so I'm sure they're going to have some incentive. They're going to have some incentive structure. Coinbase will have some incentive structure, and that'll grind a little bit at the margins, but I don't know if that's anything more than a rounding error. Even though OpenSea is terrible in so many ways, it's where you go to do degenerate gambling in the NFT space. Luckily, that's just a small portion of individuals after the God, what a quagmire. Do you want to just give people an idea of how quagmotic the other deeds sale of future land deeds in Monkey World? You want to tell people how that went down?
Well, I mean, just even explaining it that far just pretty much lost me. But I mean, the auction itself and I don't know if any of you guys watched this thing, but I sat there and I watched the whole thing because it's interesting to see how these things break down. But basically, they tried to do their mint. It was 100,000 mint, which is huge. Half of that was reserved for insider trading, basically for Yuga Labs to.
Well, at first they lied about it. First they lied about how they were going to do it. There were going to be tiers. Yeah. There was going to be a Dutch auction, which a Dutch auction is what you would want to do to find what the market feels like is the correct price. But they couldn't do a Dutch auction because they knew that at the end of a Dutch auction, there'd be a lot of people that were underwater on the investment, and they couldn't have the public image of people having lost money. So what they did is really stuck it to people.
But they stuck it to people, and people had to pay basically 2.5 ETH per transaction just to mint one of these things. And when I say 2.5 ETH, up to 5, I know I got personal friends that spent 4 ETH to mint 2 of them, and that 4 ETH doesn't go to Yuga Labs. It doesn't go anywhere. Nope. It's burnt into oblivion. It's gone forever, sucked out of the NFT ecosystem. This was done so poorly. Multiple people are pissed off, leaving the space, leaving the Bored Ape Yacht Club, selling their apes, selling their mutants, selling everything they have related to Yuga Labs, and it's just a poor look for the space. It was horrible. Horrible launch. Unfortunately.
Horrible launch, and it gets back to this when you're looking at, even in the NFT space, if you're going down the list, team, the 5 T's, team. Their team is weak. But you don't need to get past that because it's a negative 40. You remember, you got 5 things, you're scoring them to 5. You got to get over a 20. If you have a negative 40 on any one of them, it's weak. So, be careful where you put your money. Stay out of the NFT space. Everyone, please stay out for now. The future of NFTs is bright and amazing, and that's when it's tickets and concert tickets, platform tickets, airline tickets, medical documents, legal documents, last will and testament, what have you. That's the NFT space of the future, where we won't call them NFTs. it'll just be receiving a digital document, and it'll have some provenance, and it'll be checkable in some kind of data structure. Great. That's going to be awesome, but it's not where we're at right now. And there was a great article yesterday about how Web3 is Tompkin Village, how it's basically just fake and nonsense and like fairy dust that people are investing into. So for now, quality assets. So yes, I leaned into Near. I also started buying Singularity DAO again. When it got below $1, I told myself, it gets below $1, I'm coming back in. I'm coming in hot. They're doing some really cool things. They're about to roll out a media campaign. They haven't been doing any marketing. The robots win, bro. The robots always win. You've seen Terminator. Every time you watch it, it doesn't turn out any different. You know, they win. So it is what it is. All right. Should we go into people's Q's and A's? Should we kick some A's?
Here. Nick, we're basically men of the people. Stockweather has a really good question here. Nick, if you were to use a bot for crypto trading, what platform would be your best pick? Also, your thoughts on KuCoin's platform for bot trading?
Nope.
Did you hear about that? There's that 15-year-old who created a bot. He's made $17 million already.
Sure he has.
15!
Whenever they
15!
whenever they check these stories out, they never pan out. These are always bogus smoke stories.
He's also the largest Otherside holder right now.
Now it's starting to make sense.
Yeah.
A 15-year-old.
Yeah.
A 15-year-old. Right.
15-year-old.
Yep. A super genius that wrote a bot, but he's also buying NFTs because he's so smart with his bot. Got it.
What other space would he be in?
I'm going to say shenanigans on that story. Okay. The bot trading, it's not there yet. The only people getting close to being able to trade with anything, with any kind of algorithmic integrity is Singularity DAO, and they're not even there yet, right? So I would just wait. And KuCoin definitely doesn't have the market cornered. Think about this. If KuCoin had bots that were successful, KuCoin would run the bots. They wouldn't let you trade the bots. Why would they? If the bots made money, and they always made money, and you just ran them into perpetuity, eventually, if A and B are true by the transitive property, KuCoin would have all the money. KuCoin doesn't have all the money. These things are a little bit better than throwing darts, but not much. Stay away from bot trading. Stay away from any of that stuff. Wait until it's AI approaching AGI, artificial general intelligence. Bots sound cool. They're nothing. They're dumb. They're little simple algorithms. They're if-then statements applied against your account, and people start gaming the bots. People just write code that games the bots. They front run them, they dump against them, and you'll wake up and everything will be gone. You'll be like, I don't understand though, the bots. And they'll be like, well, that's the risk you took when you set up a bot account. Blah, 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 blah. You read the fine print. And then they'll get Breric to read in his creepy dude in a dark alley voice that bot trading is dangerous and you may lose all your funds.
That sounded really good. So
you want to hear
bots. What is this? Oh,
that's
crap.
5 seconds of digestion.
We got another question from Michael from Maine.
Michael from Maine. Michael from Maine.
He starts out really nicely. Hey, fellas.
My main man, Michael. What?
Been away for a bit. Nick, can you review KNC and why is APE gone up so much? Thanks.
Wait. Kyber. I don't know enough about Kyber. It was not.
Kyber
it was never super.
Crystal. Yeah.
It was never super exciting. So I'm not in it. I'm not in it. It was never. Things have to be somewhat tantalizing, and there's so many assets. You can't own them all. It's not like Pokemon where you can. It's not like you can't catch them all. In Pokemon, I caught them all.
This funny thing. I went to Samuel's Club, Sam's Club, to get some stuffing yesterday.
Did you call it Samuel's?
Samuel's Club for 30 minutes.
What, were you on a farm in the Quaker states?
I had to get my lemonade and my iced tea. So this
Jesus,
guy
you're
stopped
Republican.
me for 30 minutes.
Did you get your straw? Did you get straw hats also?
Well, they sold out.
Tweed jackets, maybe a wool neck scarf.
They're out, Nick. They're out. Focus. This guy's talking for 30 minutes.
Got you some penny loafers, do you? Some nice penny loafers.
Those are last year. Okay.
That's a real penny in there.
Assets that I'd never heard of. And that's just what you said. There's 6 million assets out there. How have you heard of all of them, Nick? You haven't. You've got them written inside your members only jacket. I have them tattooed right here. Well, you can't see it because I paid for the tattoo, but they said it's invisible ink. I have to like shine a light. Anyway, it's a whole. Yeah, it might have been scammed. The same black light that the crime investigators used at your house, and it looks like a Jackson Pollock. That one. That's the one. Wait, why has Ape gone up so much? Then you know about Ape. Okay, right? so listen. Any of these NFT kind of cycles happen like this. You get a lot of people excited. Same thing happened with the Moonbirds. Now, with the apes, it's a little bit different because you had a lot of celebrity signaling. You had a lot of celebrities that don't know anything, like the Mark Cubans of the world, that talk a big game, but they cognitively, like, they don't know. Like, you ask them a question, the lights are on, but it's clear that no one's home. And so they signal to the world, hey, bro, I'm so woke. I get it. I'm tech savvy. I'm Web 4. I'm past Web 3. I'm Web 4 because I'm a celebrity. And so you get a lot of celebrity signaling. So you saw the NFT space spin up in early 2021, and it really caught hold with the Bored Apes, and the floor kept going up. Why? You have a small handful of people. They're just not willing to sell. It looks like a pyramid scheme. It smells like a pyramid scheme. It's a lot like a pyramid scheme, but it's not so much a scheme as it is. Listen, if no one sells or very few people sell, and you can convince other idiots, greater fools, then you have a market. And so that's what's going on. And cool, good for them. Good for everyone that made money. I hope everyone makes money, but we all know how these things unwind, and it doesn't really work that way. So apes went up because there's more people that want to signal, hey, I'm woke AF also, and they're buying these things, which I hope they enjoy them. I am trying to be more honest with myself about the NFTs that I buy, because listen, you can go look at anything online for free. You can go take a picture of it, go print it, and you can put it on your wall for free. The idea of ownership is a very weird, very human, very kind of greedy and kind of twisted concept that I'm trying to rework in my mind. The idea that I have to own things that I'm just going to give away or that have no real value. I think that we probably lease everything in our life. And so I'm working on that. But in the NFT space, sometimes people just want to own something. And if you own a digital something with a number on it, you can sell it to somebody else who thinks that that number has value. It's very illiquid. It's very risky. It's very cognitively weak, if we're being honest, but it is what it is. So apes go up. Now, at some point when it starts to unwind, it will get real ugly because a few people will be able to get out. There's, probably 100 parachutes in the Bored Ape community. If 100 people sold apes and they started undercutting themselves and there's a panic for the door, there's about 100 people that can sell somewhere near the price right now. And if word got out, the whole thing collapses and it goes stupid down. It gaps, but there's no gap down. There's no stop valve in crypto. If you get a gap down, you can go to zero. So is he talking about ape token or ape like apes? Ape token, right? Is that he's talking about ape token? It's the same thing. People bought the ape token to go buy land. They wanted to buy. It shot up from 14 to 27, and then now it's back to exactly what I told you guys last week. Was I on the show? I told you that it was going to drop back down. It's at 14 again. That's because that's what happened. That's just the way it should be at about 14 cents. It should be because it will keep dropping. I see this thing going back down to $9. Easy. Another $5 drop, which is huge. So how do you value something that really has no intrinsic value? It was a stupid gift token created out of thin air that has no value. Yeah, they should have sold it. Like it should have been instantly sold. Yeah, I don't know why anyone held on to it. Some people invariably will make money. Most people will get punished on these things. It's cool though. The people that got it airdropped, good for them. They got a free gift. Don't look a gift horse in the mouth. Listen,
if you get
If
any
I get
airdrops in crypto,
$250,000 for free, I'm selling it.
listen, any airdrops in crypto, any airdrops in the crypto space, in digital assets, any airdrops, period, sell them, half of it immediately, 50%. Don't even think about it. Go 50% to stablecoin and just take a breather. It always pays off. There's some flashes in the pan, but take money. If the good lords of digital money give you free internet money, bro, sell it into real money. Don't give it to these idiots, and don't support a fake network with their fake token that might have real value for a very short amount of time. So, Mark D,
I like
that
philosophy. I like it. All right, Nick, we got Cruising on Crypto. He's all over crypto. I like this guy's name. He wants to know your watch list library. Like, where do you get all your information? What sites do you use to gather the information that you're using to either make informed decisions or make horrible decisions on OpenSea? Where do you stay informed?
I just read everything. I like the Blockfolio app is pretty cool because it has a news aggregator service, and you can get news aggregated from like 20 different, and then you have to say, oh, these are the VC scammy, stupid ones. Don't read those articles. These are like, I'm not going to say which ones I like or don't like, but certain companies have certain very clear financial biases, but you read that too, because you can see the way people promote will tell you a little bit about the company and what looks like they're doing. So I just read every single article every single day, period, full stop. When I go work out, I do cardio, I read articles. When I'm just walking around, I read articles. I go have coffee, I read articles. I just make sure that nothing escapes me. And then I go, okay, was this real news? Or like, so an example, you guys will notice that Algorand popped up. People are like, yes, we love it again. No, we don't love it. They did some stupid sponsorship deal with FIFA. By the way, the dirtiest sports organization in sports, FIFA, where everybody's on the take. Like, everybody. And Algorand did a sponsorship deal with him. Well, this is no better than any of the other dumb FTX deals. This is, again, some kind of weird, I guess, sports virtue signaling thingy. I don't know how this helps Algorand at all. I don't think anybody, look, professional soccer is amazing. Football in Europe is amazing. This is not that. This is a FIFA sponsorship. This is stupid. This is another failed marketing attempt by Algorand. It's weak. And I'm guessing the market is already judging it weekly because it got up to like 79 cents and then has already basically given up all those gains. So all that money they spent has so far been pretty much wasted. So we'll see. Again, I like Algorand for the math. I like the development team. My only gripe is their marketing team, which is only a few people. So my gripes are not about the quality of asset. Algo is a quality asset with a quality team. If you get past the marketing team, which is an abject failure. On the other side of that, if you see the value in that, you say, listen, all they have to do is make a couple of fires and a couple of hires, and maybe this thing completely changes its face. And maybe there's some gold in them there hills. Anyway, everything is on sale, Howard. You are right. All of the quality assets, in my opinion, are on sale. Let's do one more question.
All right. You are pretty well informed, Nick, even if your pews are getting a little bit weaker as you get older, which is unfortunate. But Steve-O wants to know, do you think Bitcoin miners are high risk right now? What are your thoughts?
No. I mean, listen, it's a dollars in, dollars out thing. If you're a Bitcoin miner, if you're mining and your electricity and infrastructure, machinery, and manpower costs less than the Bitcoin you are mining, it's a good business proposition if that flips. But most of these people, listen, it's you subtract out all of your costs, and what you're left with is your marginal cost to produce a Bitcoin. And if the market price is ahead of it's market price minus marginal cost, and that's what profit is left. You hope that's a positive number. You're going to sell a percentage of that. And you're probably going to bank a percentage of that Bitcoin and kind of gamble on the market. If you're smart, you're selling a third to a quarter of it as a miner instantly, which may look like short selling or negative behavior, but it's really not. It's just running a business. And so that's what you got. So it's a business. I don't think that they are pro, negative, whatever. It's just a business. And if it makes sense, it makes sense. So there you go. Would I be investing in the miners? No. No, because the best way to mine Bitcoin is to buy Bitcoin. That's the best mining, in my opinion. Just buy it. And then if you want to find some carry trade, you can do that too using some kind of convoluted future synthetic strategy. All right. That being said, stay out of trouble. Stay in school. Today, I'm doing a shoot with CNBC. That'll be fun. I'll tell you guys about it later. I may or may not have a show Thursday and Friday because I'm going to be in New York recording some stuff for us for the future. So we'll see. Otherwise, don't do anything my poor, insolvent, drunk, strung out on meth grandmother or Breric wouldn't do, which, as you know, is so very little. And on that, I bid you a pew pew. Pew pew.
Hey, pew. Hey, you talking to the prop.
Okay, buddy.